Okay, good morning, everybody. We're going to go ahead and get started. I want to thank everybody for joining us online here for GLMI's Expert Webinar Series with Abby Green. And today she's going to be going over the Medicare cost reporting from basics to benefits. So there's lots to cover, so what I'm going to do is just turn the mouse over here to Abby, and she's going to go ahead and get started.
Good morning, everyone. Glad to be back. This morning, the title is Basics to Benefits because we're going to cover not only the basics of how to complete your cost report and some of the resources available to you, but also hopefully at the end spend a little bit of time talking about how to use the report as a management tool. So you have the agenda there in front of you. We're going to talk about the background of cost reporting, resources, spend some time on data collection, what data you need, and how to decide where to get that from, and how very little time on actually completing the cost report, just some brief overview, and then talk hopefully about some benchmarks and key performance indicators that you can calculate from your cost report. So to begin, I thought we'd just spend a minute on some of the history behind the cost report and why we complete it. Historically, home health was a cost-based program, and so the cost report was calculated so agencies could settle up once a year with Medicare, and either they repaid money or they got pay a settlement based on whether their cost was more or less than what they had been reimbursed throughout the year. Currently, we use the information for rate setting, Medicare does, and that is the main reason for using that, for us having the cost report to file. It's important to remember for home care and hospice both that this is a regulatory requirement. You don't have a choice. It is subject to audit. There have not been very many cost report audits since 2000 when PPS came into effect, but it is still in the regulation. And at some point they will begin to audit these again, I believe, mainly so that they can ensure that their rate setting is accurate. There are penalties for non-filing, and if you're have ever been 1 day late and didn't get a Medicare check for 2 weeks, you know what that penalty is. The penalty is that they will discontinue sending you your checks until they receive an acceptable cost report. The due date for the cost report is 5 months after the end of your fiscal year. So right now, for December year ends, your due date is May 31st. Coming right up at us. And for our many home care and hospice agencies that are June year ends or September year ends, their cost report deadlines are November 30th and February 29th. So start counting 5 months after the end of your fiscal year, and you'll know what your deadline is. Medicare recommends that you send it in at least 2 weeks before the deadline. That way, if it is unacceptable for any reason or if there are any missing components, you can get those completed before the deadline. If you wait, you could jeopardize that cash flow. So since we have to do it anyway, one of the things that we're going to talk about is what you can use a cost report to do internal analysis, external comparisons. There are both clinical and financial uses, because if you are able to look at some clinical outcomes based on the statistical data. Also, this information can be used to support legislative change, and National Association for Home Care has a pretty extensive database that they maintain of cost reports just for that purpose. So it's important that we make this as accurate as possible so that we're not hindering those efforts. There are resources for Medicare costing methodology on the CMS website. The instruction manual is HIM 15. There are 2 parts. Part 1 contains the reimbursement rules, and Part 2 are the actual line-by-line instructions for completing the report. It's not quite as helpful as it sounds, but it does at least give you a sequence for completing the cost report worksheet. There's also a CMS 339, that's a questionnaire that you fill out and submit with the cost report, and on the website there are separate instructions for those. You can go to the CMS website to find forms and instructions, You can also get to the Medicare costing instructions from your intermediary's website, from NGS or Palmetto or Cahaba. So just let's talk just a little bit about some of the information contained in those resource manuals. These are just the highlights. Remember that the basic premise of the cost report is that Medicare only wants to pay for costs that are related to patient care. That means that you have to be able to substantiate and trace that link from the cost to the patient care, direct patient care. There are some certain expenses that are treated specifically in the manual. One is benefits. It allows you to either assign those benefits to each of the Medicare direct care lines based on a percentage of salaries, or you can directly assign it. There are some special rules on capital assets and depreciation and how to calculate that depreciation. Hospitals have a useful life table, and Medicare requires home care agencies and hospices to use that useful life calculation. Also, Medicare does require you to use only certain methodologies. You cannot use accelerated tax methods like some of the bonus depreciation rules or Section 179 rules that are in place right now for tax preparation. You can't use that for your cost report depreciation. On interest, Medicare will pay for interest on a line of credit that's used for operations because you can relate that back to patient care. They will not pay for interest that is incurred in the acquisition of another business or some other equity purpose, because that isn't related to patient care, that's related to ownership. So for instance, if we think about patient care related expenses, a skilled nurse is obviously out in the field taking care of patients, so that time is related to patient care. And so you're going to put that cost on the skilled nursing line on the cost report. However, really all of her time is skilled nursing time, even if she is taking paid time off or in a staff meeting or she's charting. All of those activities still relate to patient care because they're the things that are required for her to deliver that care. Likewise, overhead, for instance, your intake department or your billing department or your payroll department, those are still all related to patient care because they're required to support the direct field staff. There are some costs that are unallowable, and there's some costs that are non-reimbursable. So we're just going to talk a few minutes about the difference. An unallowable cost is a cost that's not related to patient care. I've listed some examples there that are specifically spelled out in the regulations. For some of you newcomers that weren't around when we had cost-based reimbursement, this may not seem like quite as big a deal to you, but we used to have auditors in our offices every year doing audits on our cost reports, and they were very specific about throwing these costs out. And if you had a cost that you wanted to defend, you often had to go before a review board and appeal your cost adjustments because it was cash. So that's the reason that it's so specific. Just so you know, for now, these are specifically unallowed in the regulations, and you should make sure that you subtract them out of your cost report calculation. And the reason, of course, is that they are not required to deliver patient care. There is a worksheet called an A5 worksheet that is the area that you would subtract these out on. The exception is marketing. At some point several years ago, Medicare determined that if you have a marketing department, it should be set up as a separate cost center, and then it will pull down overhead into that cost center. So you do need to look separately at how you're handling your marketing costs. Then there are non-reimbursable costs. These are items that may be allowable, and Medicare may consider them related to patient care, but they are not reimbursable because the care is not a home health or hospice benefit. So for instance, private duty programs, Medicare pays for home health aide and nurses and LPNs, which are also used in private duty programs, but to the extent that the private duty program is not skilled intermittent and it is not reimbursable because it's not a Medicare benefit. The same thing for respiratory therapy. Dietitian is another one. We have those professionals in our offices, and they do act as resources, but they aren't a separate line item. They're not reimbursable as a home health benefit. Some of you may have a dietitian on your staff as a resource to the skilled nurses that they can access for questions and assistance. In that case, it could be an administrative cost or an overhead cost that would go in your administration line. It just would not be a separate line item. Just another note, when you're looking at your private duty program, remember that the key to Medicare eligibility is skilled and intermittent. The visits have to meet those two criteria. And so some people have a private duty division within their company that provides skilled intermittent care to commercial insurances or to private pay. Make sure you include those skilled intermittent activities as a reimbursable cost. The rule says that all of your Medicare-like activity needs to be accumulated for your business, for each EIN number, for each separate corporation as Medicare business. That is, Medicare wants us to do that so that they can get an accurate cost of all skilled intermittent visits, so they can accurately, they believe it more accurately reflects the cost per visit. Just a quick note on Part 2 of the Chapter 15 manual. It contains specific instructions for each worksheet and the recommended order of completion. We are not going to go over that today just because there isn't quite enough time for that. You are required to submit your cost reports electronically. It's no longer allowed to submit them on paper form. So there are several vendors listed on the CMS website that you can select to purchase your software from. CMS also provides free software. If you have a very small agency or low utilization provider, you may want to consider that. I haven't used that in a very, very long time because it does not have built-in edits, and it does not help you ensure that your program is complete. Most of the vendor software is very affordable, and they do have built-in edits to help make sure that you haven't made any mistakes and your cost report isn't going to get rejected. Just a quick note on other cost report forms. The ones that I file most often is a Michigan Blue Cross and Blue Shield cost report. Not all Blue Cross Blue Shield programs require a cost report. In fact, I don't know if any of them do except for Michigan. And 2011 is the last year that they're requiring it. So just a note on that to make sure you're checking with your state to find out what other cost reporting requirements you may have. There are some states that require Medicaid cost reports still, not very many, but if your agency is required to file a Medicaid cost report, you want to make sure that you know whether that deadline is the same as Medicare's or different. Some of those cost reports use the Medicare cost report as a basis for their report, and some of them start from scratch. So let's just talk a minute about data collection. This is probably, if you have a preparer that prepares a cost report for you, this is the part of the process that you pay the most attention to so that you can get accurate and timely information to your cost report preparer. The first item is a trial balance, and that should be an accrual-based trial balance. If you keep your records, financial records on a tax basis or a cash basis, you need to make sure to do accrual basis journal entries. That is a Medicare regulation. If you have a chance to reorganize your trial balance, if you're in control of your general ledger chart of accounts, it's nice to go ahead and follow the cost report line items when you're setting up those expense accounts. It just makes preparing the cost report very much easier, and it makes that data collection easier. Some of you are assigned cost report or general ledger account numbers from your parent organization, so you may not have the chance to do that. But if you can, it's something to consider. So we're going to just take a look at some of the specific data. The first set of data is statistics. The first Section S of the cost report are all statistic pages for both home health and hospice. The most important, the first thing they want is unduplicated patients by payer. The way the payer categories are assigned is Medicare and then other. So you don't really have to worry about breaking out non-Medicare payers. Make sure that you consider Medicare HMO as other. That's considered a commercial insurance for this exercise. The only Medicare that statistics you should include are the straight fee-for-service episodic Medicare payments. You also need to collect chargeable visits by payer for each discipline and in total. Home health aid hours by discipline by payer. So you'll be collecting the number of hours invested for the visits that you report. And hopefully your time record keeping system does allow the aides to record actual time and not just a flat amount of minutes per visit. You need to collect episodes by type of episode, so full, outlier, LUPA, and PEP. And number of FTEs by discipline. For that, it wants to know also how many directors you have and administrators and then other overhead FTEs. And just a reminder, FTE stands for full-time equivalent. So it's a full-time equivalent is normally defined as 2,080 hours a year. So if you have a lot of part-time staff, you may need to do a calculation to get that number. And then the final statistics is chargeable visits by discipline by MSA for Medicare patients. So some of these Medicare stats are difficult to get out of your billing system because at the time that you bill, you may not know what MSA they live under, or you may not know Medicare may pay them under a different MSA than you have them in the system as, or you may not know whether a charge is going to be a full or a PEP or a LUPA until after the fact. So usually we also compare your internal statistical information with the provider summary and reimbursement report and then kind of reconcile those two. So let's talk about the PSNR for a minute. PSNR does stand for Provider Summary and Reimbursement Report, and basically it's a report from Medicare that gives you a summary of all the claims that they have cleared through the system for the fiscal year that you're looking at. You can store that in your system, either paper or electronic. I think you're required, they don't send them to you in paper form anymore. You have to dial into your PCOS and get those. I think many of my clients this year have been unpleasantly surprised that it had been over the time limit since the last time they signed in, so they had to go through a revalidation process. So if you haven't signed into your PSNR report for a while and you don't use that system for any other reason, please get on there right now and make sure you can get your provider summary report, because if you have to revalidate, it's going to take a little bit of time to get that processed. The PSNR information is used to complete worksheets S, C, and D on the cost report. So there are a couple different types of information. The visits and charges that are processed, the actual cash payments that are received, and then the patients are all included on the PSNR report. Especially if you think your billing is a bit behind, we need the PSNR report to compare to your internal statistics, because we can always include the extra stuff that hasn't been billed yet. Square footage is the next piece of information that we need. This is required to allocate the cost on worksheet D. It's the main allocation method for depreciation and occupancy costs that Medicare requires. The idea is that if your agency space is split up by discipline, you can use a floor plan and measurements and get the number of square feet for nurses and how many for PT, OT, home health aid. This is not as useful as it used to be before electronic records. It's used more in hospitals where they actually do have inpatient activities going on. But for a home health agency that uses electronic records, you may not even have a designated space for disciplines anymore. They may just have a small workspace that they all share. So if you're in that situation, then all of your square foot statistics would be administrative space, and that is more common now. Regardless, we need the total number of square feet for your facilities. Then we also need supply charges by payer. Most agencies, when they get a bill from their vendor for supplies, they're really not certain if it's being used for billable as a billable supply or a routine supply. It's recorded two separate places on the cost report. Billable supplies have their own separate line. Routine supplies are included in administrative and general costs. So we go through this exercise that I've kind of explained here to calculate what the cost is of your billable supplies that we have to separate on a separate reimbursable cost center line. And basically, we add all that cost together. We look at the charges that you charged for supplies and divide it by your markup, your average markup, and use that to get back to your actual cost of billable supplies. I've never seen an agency that was able to keep track of it more accurately than that, just because the vendor payable system is normally separated from the billing and statistical system. So we do need what your supply charges are and what your markup is. The other data that we need financial statements, because there is a series of called Worksheet F series that Medicare collects your balance sheet and income statement and equity statement. We need asset schedule. Medicare wants that information on what your new and disposed assets and what your ending capital assets are. And then there's a home office cost report. If you have a home office cost report, we need that for Worksheet A6. And that would be most likely if you're a hospital-based agency, you would have some home office costs that would be included, pulled into your home health or hospice cost report. As I said, we're not going to go through the worksheets of the cost report, but I did include a slide here that tells you if you're looking for a piece of information on your cost report, kind of gives you a clue where to look. If you have more questions about that, just give me a holler and I can help you. So now that you've completed your cost report, we know we have to submit it to Medicare, but it's nice to be able to use it internally and at least get some value out of it after all that hard work. So let's look at just some of the basic measurements. The first basic measurement that I wanted to talk about was your case weight on completed episodes. It's kind of hard in most systems to get an average for your entire body of work here. But if you want to calculate your case weight from your Medicare cost report, you can do that. So you just take your total payments, divide it by your total paid episodes. Then you go find out what the national base episodic rate is for the year you're working with, and multiply it by your most common MSA index. Most of you just have one or two that most of your patients are in. That gives you your base episodic rate. So if you take your average payment divided by your base rate, that'll give you your case mix weight. Clear as mud, right? Remember, the higher the weight, the higher the average payment. Just pointing out there at the bottom, it does not indicate profitability. That really depends on your cost, too. So you could have a very high case mix weight, but if your cost is very high, too, you may still be in trouble on profitability. So here are a couple other basic measures that we try to calculate from the cost report information. The percentage of each type of episode, that's a good thing to track internally to see if you're, and benchmark externally also, what your percent of lupus are, what your percent of outliers are. And then you can use the cost per visit from Worksheet C to calculate total cost and compare it to the total payments on Worksheet D, and you can get some profitability information off of the cost report too. We always calculate for our clients the average visits per episode by discipline. You can also calculate the average length of episode and the average supply cost of episodes. You may want to track particular OASIS assessment questions. All of the information is not in the cost report, but it gives you some of the information you need to combine with your OASIS scoring questions to calculate those metrics. And then, of course, there's a wealth of cost data within the cost report that you can calculate from FTEs to percent of salaries and benefits and transportation and so on. Then I often get asked, what are some benchmarking sources to compare myself to? And I've just listed a few here that I recommend. Michigan Home Health Association has a reimbursement committee that does a twice-a-year cost report benchmarking, and they are getting ready to do that at the end of March. So if you're a Michigan agency, you could participate in that. You can call NAHA or you can ask me for more information. I'm sure there are other state associations that do something similar. NAC has a cost report database that you can purchase from them, and they often, once a year, publish some statistics. Freedom of information, I listed that because it's important to remember that you can request cost reports from other agencies in your area through Freedom of Information. You need to have their name, their legal name, and their address. The more information you get from Medicare, the more likely they are to find a cost report. So if you can get their provider number, that's helpful, but we can't always get that. There are some vendors like FOSI and a couple others that do benchmarking that you may come across. And then Home Health Line and some of the other publications from time to time have specific benchmarks. So just as you come across those, record them and store them, and then you have something to compare yourself with. And I think that's about it. Just a reminder, if you need some help with your cost report, give me a call. We can help you with that this year.
All right, great. Thanks, Abby. And this is, it looks like we could actually spend probably another couple hours on the details of this webinar. But like Abby says, I'll have some contact information here in a minute. But if you need assistance with your cost report, questions, things like that, feel free to give Abby a shout out with an email or a phone call. All right, just real quick, next month's webinar is on the quality assurance. That's with Laura Greifinger from Quality in Real Time. We'll be doing Quality Assurance Part 1. So be sure to tune into that, April 17th at 11 a.m. So again, just remember these expert webinars are going to be the third Tuesday of every month. And another thank you to our sponsor, the Revenue Cycle Management team, for putting on this webinar. And just again, the questions there, did you collect all that you could have in 2011? Do you even know? Are you falling behind in your collections? Your first step to those answers are only a phone call away. Give us a call, and we will perform a free billing and financial audit snapshot for you and get that report to you and review it for you for free. So we have a little bit over on time here, but I don't know if there's any questions out there. So we'll just give a few more minutes for questions. Right here we have a question. I had a question last week at Michigan Home Health Association. What is the allowable markup for supplies?
That's a good question. A few years ago, Medicare was sending agencies inquiries if they thought their markup was too high. I didn't have any agency that was actually challenged on that. They were just looking for more information. What I see most often, by the time your agency overhead is applied, your markup should be at least 200%, or else your total cost is going to be more than your charge once the overhead is pulled down on it. Most agencies are between 250 and 300% on markup, but I have not seen Medicare challenge any agency and tell them that they had to lower their cost markup. There's not any regulation that defines that exactly.
Okay. Any other questions? Go ahead and just pop them into your Q&A area on the right-hand side of your screen. Again, this isn't the last time you can ask this question. As you can see on the screen there, you've got Abby's contact information. You always know how to get a hold of us, and we can definitely answer questions or direct them over to Abby as those questions become too difficult for us to answer. All right, well, it doesn't look like we have any more questions. I want to thank everybody again for joining us online. I want to thank Abby for her time in presenting this expert webinar, and I appreciate all the good information that she's given us here. And again, if you have any questions, the contact information I'll leave up on the screen here for a little bit. This webinar will also be published out on YouTube, so for a later reference, if you want to show this to staff, you can go ahead and do that. And that will be for everybody who attended here. You'll receive an email with the link to the YouTube video. All right, thank you, and have a great day.